Hey guys, welcome to another accounting video. If you're here to learn more about accounting, then you're going to want to check out my Controller Academy online course, which is a 6-hour online course that teaches you everything you need to know about accounting, from accounting principles and how to apply them to a real-life business from scratch, covering the entire accounting cycle, and it's suitable for accounting students and accounting professionals as well. So go ahead and check it out. I'm going to leave a link down below. In this video, we'll cover bank reconciliation, which is one of the simplest, most basic tasks for an accountant, and yet has a huge importance on closing the books and generating financial statements. So in this video, we're going to be covering three things: the why, the when, and the how. Why do we need the bank reconciliation? There are a couple of different reasons why we need them. And the when do we perform a bank reconciliation? And then how, I'm going to show you with a real life example how to perform a bank reconciliation. So let's jump right in. Now, there are a couple of different reasons why we perform a bank reconciliation. The first one is to ensure completeness of our books and records, right? And the second one is to uncover any potential fraudulent activities. And an example of that, if someone in a company wants to steal money and manages to send a wire to their cousin in Argentina, now with the bank reconciliation process, someone else will be looking at this transaction and asking questions: where is this wire going? What kind of expense it is? Who is that vendor? And all these questions will uncover the fraud. Now, when are we performing a bank reconciliation? Well, in general, we have day-to-day activities that contribute to our bank reconciliation, as well as month-end activities. So, as an example of the day-to-day activities, for example, we are connecting the bank to our accounting software. Right? You can do that by connecting a bank via API connection to your accounting software, or by uploading a bank file into the accounting software. The second thing you're doing is that you're applying the cash that you receive from your customers to open invoices, right? And the third thing is applying the cash that was spent to open vendor bills to close out these bills. So this is the day-to-day. Now, at month end, when you're able to generate an actual bank statement from the bank website, you'll go in and perform a reconciliation in accounting software. And we'll go through an example here in a minute of a bank reconciliation, and you'll enter any missing transactions and ask questions about transactions that you don't recognize. So in summary, what you're doing at month end is grabbing a copy of the bank statement and looking at your books and records and ensuring that the two are equal. So now let's grab a bank statement and go through an example of how we reconcile the bank statement to the books and records. All right, gang, so we grab a copy of the bank statement from Chase, and this is for the period March 1, 2022 to March 31, 2022. And you'll see here that it has an opening balance, right? $2.3 million. It has debits and credits. Debits means cash going out, and credits means cash being received, most likely from customers, and then an ending balance. So what we'll do is we'll go ahead and reconcile this to QuickBooks Online. It begins with grabbing your opening balance. So the opening balance is 2318178. So when you go to QuickBooks, you go to Accounting and Reconcile. When you click on that, it will open up the reconciliation page of your cash accounts. You select the cash account from the drop-down menu. So this is our Chase checking account here. The beginning balance is 2318178, which matches our beginning balance in the bank. Now it says enter your ending balance, so an ending date. So you'll get your ending balance from the bank 1707134, and the ending date is going to be the end of March. So we'll select March, and then we'll click on Start Reconciling. So in the reconciliation page, you'll see the statement ending balance, you'll see the beginning balance, you'll see all of the payments that went out and all of the money that came in, right? And then you'll see a difference between the two sets of $644,000. And down below here, you have all of the activities that QuickBooks thinks that these are the activities related to this bank account. So you'll look at it, and then you'll put in a check mark next to the item that pertains to this bank account. So I see, for example, that there's a check mark in all of these business transactions, which are correct. But then I see here that there is no check mark next to this one, and it's a payroll for March 2022. And I know for a fact that this should be included. So I'm gonna go ahead and put a check mark in it. And when I do, it's going to say, ideally it should say my difference is 0, but now it's saying that there's a difference of $20,000, right? So now this is my reconciling difference that I need to investigate. I look down below here, one final look in the transactions to make sure I didn't miss any of these transactions. And as I'm looking, everything has a check mark next to it, which means that this $20,000 is a reconciling difference between the bank and the books. So my next step is going to be to look at the bank statement again and try to see if there is a transactions of $20,000 that is not being booked on QuickBooks Online. So I'm going to go back to the bank statement. I'm going to inspect the transactions for a transaction matching the 20,000. And as I go down here, I see there's a transaction in the last day of March for a severance payment to the sales and marketing team for $20,000. This is most likely what is not being captured. I'm going to flip back to QuickBooks and see if it's being captured anywhere here where it says payment. Right, it's not here, which tells me that this is the transaction that is missing. So my next step is going to be just to make sure this is a legitimate business transaction. Since it's severance, I'm going to be checking with the HR team. Right, I'm going to ask them, hey, I've seen $20,000 being triggered in the bank. Do you authorize this? Who is this related to? And they'll give you the detail. Once you verify that is correct, now you can go ahead and book it on QuickBooks Online so you can reconcile the books. So in QuickBooks, I'm going to go up here and I'm going to say save for later so I can go back to this and reconcile it once I book my missing transaction. So save for later. And once I come back, I can click on resume reconciling. So now I need to go ahead and book my transaction for $20,000. And I'll do that by going to new. And I'll go to journal entry. So I'm going to book a journal entry. All right. The date of the entry is going to be the date the cash went out, which is March 31, 2022. All right. And it's going to be an expense. So it's a severance expense. I'm going to start typing severance expense, debit $20,000 and credit to the cash account checking for $20,000. I'm going to put in a description, severance, sales and marketing. And in class, it's going to be also sales and marketing. And then I'm going to go ahead and put the same description in the second line and also put it in the memo section. And now it is ready to be saved and closed. I'm going to click on save and close. It's saying that transaction doesn't have a class field filled out for the balance sheet item, which is fine. We are only tracking the class for the income statement item, not for the balance sheet. So I'm going to click yes. And now it's been saved. Now I can go back to my reconciliation and click on resume reconciliation. All right, so now we still have the $20,000 difference, but now if you look down here in the transactions, there is a transaction that we just booked right now. So we just highlight it or click on it, and now our difference is 0. So now we're ready to finish. I'm gonna click finish, and it says this account is reconciled. And now you're reconciled and your cash balance on the banking statement equals the cash balance on the books and records. And you've seen that we found a missing transaction and we questioned whether it's a legitimate transaction or not. So you see that it's a way to capture any potential fraud, right? And now you balance the two sets, the bank statement and the books and records. That's how you perform a bank reconciliation.